Talking Joe podcast, minds in motion. Talk about relationships, help your emotions. Behavior management when your kids start to losing it. Talk about life and all the confusion. Minds in motion. Minds in motion. Talk about relationships. I'm talking Joe podcast, minds in motion. Talk about relationships, help your emotions. Behavior management when your kids start to losing it. Talk about life and all the confusion. Minds in motion. Minds in motion. Talk about relationships. Emotion. Minds in motion. Talk about relationships.
Good evening, everyone, and welcome to Minds in Motion with me, your host, Jewel. Minds in Motion is a show that is going to give you real talk, real strategies, and real situations. Tonight, I have an amazing guest. I love to use that word amazing. The guest that I have on tonight is going to be talking to you about life insurance and the importance of getting life insurance for your children and for yourself. The guest that I have on is Sophia Waterman, and I welcome her to the stage. Welcome to Dissect. Sophia.
Thank you. Good afternoon. Nice seeing you again. And how are you today?
I'm great. How are you? How are you
Awesome.
doing?
Thank you for having me again on.
Yes. So Sophia just said, welcome. Thank you for having me again, because she was on Dissect. Dissect is the other show that I do on Saturdays. So Sophia had the pleasure of being with us for 2 days this week, pretty much. Well, last week and this week. But welcome again. Sophia is a life insurance agent, not just your average life insurance agent either. She's going to be explaining all about the differences and answer the questions that you had about life insurance. So what brought you to, tell us a little bit about Sophia Waterman, actually. What brought you to doing this?
A little bit about me. 15 years ago, average mom, 4 children, single mom, 3 jobs, the typical Black family, most likely, a colored family. And on my way to my third job, my car went under the tractor trailer. That will forever change my life.
Mm-hmm.
After years of recovery, somebody introduced me to say, come onto this platform. I want you to learn some things. This will be great for you. I'm like, nah. And that day I went in. 3 months later, I reached out to him and I said, tell me, can I still come and check that? That day, Jewel, I learned that had I died that day, my kids would have gone into foster care.
Mm-hmm.
Had I had, because I had no insurance coverage, I had to deplete my income, all my money that I had saved, that I thought I had saved. So all the things that could have happened worse, I've learned in that 1 hour. And I said, people need to know, our diaspora need to know this information, because it's unfair that it's out there, but nobody bringing it to us.
Yeah.
And that's what triggered me more and more. And the more I talk to people, I realize more people need to know the information.
Yes.
Yeah.
Absolutely. Thank you for sharing your story.
Yes.
And it's great that you have your own testimony to talk about what life insurance did for you. And I guess as we go along in the interview tonight, you'll talk more about why you chose life insurance and to actually sell life insurance to our diasporic communities, right?
Mm-hmm.
I know when we talked when we spoke last, it was you mentioned life insurance in our community and what it does to boost the I would say the importance of having life insurance in our community. Do you remember what we were talking about?
Okay. Yeah, so I was even thinking about that after the fact.
Mm-hmm.
And I look at a community that they say a gated community. And a gated community, you don't see crimes A matter of fact, you see more security. You have to go through security guards. You have to go through certain things and so forth. Because guess what? That community is important to the people that have to pay out for all the wealth that is built up in that community.
Yeah.
So I said, if our community decides that if every home, every Black community, in a community where there's dominant Black people, if each household decided, yes, we're going to take insurance on ourselves and our children, we're going to see the difference in that neighborhood as opposed to a neighborhood that just don't care or do not have. Not that they don't care, it's the information bringing to them.
Right.
A lot of community do not readily have that information to them.
And sometimes they may have information, but not the right information. Or there's people who do self-life insurance and they don't tell you the fine print, or they don't tell you what happens when you don't get a particular type of life insurance. And we'll go into that, right?
Yes.
So essentially, having life insurance brings up the value of your community or the value of yourself, right? And you're protected more. I think we talked about that too. The government protects you more. There's more security that's around for you, right? And it's obvious. We can see this on a daily basis where we live, right?
Yep. And remember, when you're doing your budget, your statement, which might be a balance sheet or whatever, your insurance, your life insurance is an asset.
Okay.
So it builds your wealth. So it may not be now, you get it now, but it's considered a wealth, an asset. So when you put it in there, the only liability is the payment, the premium, but it's actually an asset. As long as you have it it remains an asset.
Okay. So
it builds also your wealth. So now you have $500,000 life insurance. You pay what, $20, $100, $200, whatever for that, but you still have in your balance sheet life insurance of 500,000.
Yeah.
So now you're 500,000 technically richer. Right?
So let's explain to people about how they can become wealthier with the life insurance. So the different types, I guess we can get into the different types and then talk more about maybe the profile of the person that it would best suit.
Yeah. So, okay, first thing I said earlier, a lot of homeowners do not take life insurance. They take on their mortgage, they take mortgage insurance. And the reason for that, because I was also one of those persons, is that we don't know. Nobody ever tell us, listen, if you buy this mortgage insurance with me as the mortgage company, then I own that insurance. We don't know that. Nobody going to buy something that somebody has owned. Does it make sense?
Right.
So when a lot of people buy a house and they're, oh, yes, I have mortgage insurance. Why? But they don't understand that they're not the beneficiary. They can't transfer that mortgage should they change the company in which they had the mortgage, and all these different downside to having the mortgage insurance. They pay only after and all that. So now we're talking about life insurance. Life insurance comes in two concepts: permanent, temporary. Temporary insurance, we call it under the dime method. You say, if you have debt, you want to clear that debt that your family leaves to you, or you're going to leave for your family, rather. Then your income, they say 7 to 10 years. Depending on how young the child is, I tell people 10 years, because you can do so much with that. That parent can do so much if they have that 10 years of income, if they have a good advisor to manage that money for them.
Okay.
Then it's dime. D for debt, I for income, mortgage.
Dime. Okay.
Yeah. The person may not have a mortgage, but what about all the rent? They have to live somewhere, right? Sometimes we say, oh, you don't have a mortgage, it's okay. But what about that expense of a mortgage, right? Then you have the children's education. Typically, the government say you can save $50,000 for the child. Sometimes the $50,000 depend on how much your child can afford your child go into school.
Right.
want to go to doctorate and so forth, and that may not be much. So at least we say get $50,000 per child
Okay.
for the educational fund. The
So that
government,
would be the RSP? Is that what
yes.
you're referring to?
Yeah,
Okay.
but if they don't have the RESP, maybe they don't have the RESP, or the RESP takes a long time to grow. Because
Right.
if you put in $100 now, you're not going to get $50,000 in 2 years or 3
Right.
years.
Mm-hmm.
So if the person dies now, you have that money that you can put into the RESP for future. So you
Okay.
can deposit that $50,000 right away.
Okay.
So now that those temporary fix, 5
Mhm.
years, 10 years, 20 years, 30 years, that temporary fix, the term life.
Mhm.
Now you say, I show you an article where it's common knowledge, CTV News it's on the web. The parents retired at 60. Well, they didn't retire properly anyway. When the wife died in January last year,
Mhm.
her RRSP rolled over to the husband.
Okay.
Now the husband ended up with 700 and something thousand RRSP.
Mhm.
The wife died. The husband now died just a few months late. So 11 months later, the husband died from,
Okay.
according to the daughter, heartbrokenness, right?
Yes.
Now they left what they call capital gain into the house that they bought, plus the RRSP. What they had to do now, because they had no life insurance to protect their wealth, they
Mhm.
had to pay $660,000 in taxes to the bank. So you see where permanent insurance now comes in.
Wow.
So one is 61 and one is 63 when they died, but they died at high income. When they died, their income was still high bracket. There was
Yes.
no insurance to protect that $715,000.
Wow.
So even though they had a
Shame.
mortgage paid off, yes, the mortgage is paid off, but what about the equity or the capital gain, the government calls it, in the house? So that's
Mhm.
where permanent insurance comes in. It helps you to mitigate taxes, eliminate or reduce taxes paid to the government,
Okay.
right? You can't do that with a term unless you die within that term.
Hmm.
So that's how permanent comes in.
Okay.
And one of the other thing that another person might say, oh, permanent is expensive. But what they don't tell you is that the permanent comes with a cash value. And there's so many flexibilities and different things you can do with that cash value in that fund. You can take it as
Mhm.
retirement, you can take it for vacation. If you get ill, you can take it out tax-free. You
Okay.
understand? So there's so many different things you can do while
Yeah.
you're growing that money tax sheltered.
Okay. I think people might be interested in hearing about that. Like, oh, I can use this. Although, it's supposed to be saving for the purpose that it's for. But if you do need it, they can use it. So do you want to expound a little bit about
Yes.
how
So
that works?
there's universal life and whole life. With a whole life, most likely they might tell you you can borrow and have to pay back, but depends again on how far you go. They will say no, you may say you have to surrender that product. With the universal life, they say, okay, you can take out up to 70% of that cash value you have there, right? Because the cash value grows in time,
Mhm.
grows according to the market and so forth. It goes up and down, but in the long run, we see money always come back,
Okay.
right? So cash value grows. And they said, listen, if God forbid something happens, you can take out 70% of that, have the life insurance still going with that 30%,
Mhm.
concentrate on your health with that illness and so forth with that 70%.
Okay.
Or you want to go on vacation, you say your kids are big, you're going now, you don't need this, you only need this amount, you have that big lump sum of cash money, you do the same again, except if you take it out besides illness, you will be taxed at that bracket.
Okay. So
Yeah.
you can take out the money, but you will be taxed at what
Yes.
percentage generally?
It will be your tax bracket, whatever
Is there a
your tax.
percentage? Yeah.
Yeah. And one of the things that I advise
Okay.
people, when you get in a little bit older, don't retire at 65 on the same job that pays you. And I'm not talking about investment now, but just a little cue is don't retire on the same job that you're getting 50% tax bracket. Because when your time to get that paid out from your RSP, then they're going to tax you 100% at 50% tax bracket market. So your margin, you understand? So whatever your margin is when you retire, that becomes your margin that when you take out taxes, RRSP investment, when you take out some RRSP, you're being taxed on whatever margin you retire at.
Okay,
So
so
that's a little,
all right. So you're saying, are you suggesting that they look for another job that has a higher tax bracket?
no, lower.
Lower.
Reduce the hours, at least
Reduce the hours. Okay, reduce your hours. So just
Yeah.
before you retire, you're reducing your hours. So
Yes.
that's why some people actually go into using their sick days, and they kind of wean down their time and then they retire.
Yeah. So you have to, it doesn't matter. The tax bracket is what's important. The
Okay.
tax bracket when you retire, if you retire at 50, it's your tax bracket when you're taking out money. You retire at making $20 an hour, that's your tax bracket when you're taking out. So it's always good to talk to a tax person. When it comes to investment, that's
Yeah.
what you try to do. Don't retire where you are, because that's where you're going to be taxed for the rest of it.
It's interesting because for certain life insurance plans, they say, you know what, they look at your last 5 years, and people are thinking, oh, I need to make more money in my last 5 years, but it's the total opposite. Is that what you're saying?
When it comes to taxes.
For taxes.
Yeah, for tax purposes, you want to eliminate as much tax room, because you don't want to be paying 150%. If your tax bracket is 50% now and you retire or you die, whatever the government said, beautiful word, is deemed dispositioned.
Yeah.
So it's a beautiful word, but it means that you're dead, you're selling off your things. This is the value you owe us. This was the tax bracket when you died.
Okay.
Yeah.
Okay. So you talked about whole life. You talked about permanent.
Universal life, permanent.
Universal life and permanent.
And whole life, permanent.
Okay. So term life insurance. This is the one that can be tricky if you don't ask the right questions, or if your insurance agent doesn't divulge this information.
Yeah.
So Sophia Waterman is going to tell you the truth here.
A lot of companies do not convert the term life. They renew it. Renewing sounds good. But I'm going to renew it. But when you're paying, when your renewal comes and you're paying $600 a month or $1,000 a month, when they told you not to buy the insurance 20 years or 21 years earlier, because it was $20 more than what they were selling for term. So if you take, I'm not saying term is bad, because term people may, especially when you're younger, you may not have the money to buy it. So you buy it that is convertible.
Okay.
So a mom might be struggling and say, you know what, I want my children to be covered. God forbid something happens to my children. I can bury them. I don't have to go and GoFundMe. If anything happens, I can do, you know, what little things you can do with that. It comes in handy. However, you have to know that when they get older, when you get money comes in, things get better, because we don't want our client to think that the life going to remain the same for the rest of it. That's why we're here. If we're not making life better, then what the essence of we doing what we're doing?
Yeah, exactly.
Right. So you're going to let that person know, listen, we're going to do review all the time. See, is their job increase? If their pay increase? Is there a debt in the family? The beneficiary, whatever it is there change in beneficiary? Husband and wife divorced, no longer together, or they separated, no longer? What are the things? We go through that with our clients. So with the term, yes, it's good to have. If you don't have it, you buy a term just to make sure you lock in your child's health, or you lock in your own health.
Yeah.
You don't lock in the age, because if you convert it 5 years from now, at least you don't have to go back and do medical. However, you're 5 years older, so you know the premium will stay a little bit higher, but you can convert it, right, into something permanent. So you can start with a term if finances is an important, but don't start with a term just because a company only sell a term and that's what they want to give you. Take term and invest the rest. And then what
Right.
happens when all of your wealth are thrown at you? This is what happened to this family. All of
Hmm.
their wealth were thrown and there were nothing for them to combat it. And she
Yeah.
said life insurance would have been so significant for the family at this point.
Right. Right. So let's kind of like retract and go back a little bit. I know
Mhm.
we started off talking about, when our loved ones pass away, we don't have life insurance, we oftentimes are the ones who are the living are the ones who have to now take care of the expenses that
Yeah,
were left by our loved
yeah,
ones.
yeah,
And this life insurance can help to supplement or actually pay off
yeah,
a lot of those debts,
yeah,
depending on the
correct.
type of life insurance that we got or the
Mhm.
sum of money that we got. So
Yeah,
I think that's essential. That's important because a lot of us, you know, um, they take it for granted that, especially I'm talking about married couples.
mhm.
If you're married and you're living with someone, or is it the same for
Common law?
uh, common law?
Yep.
Same. Okay.
Mhm.
So their expenses become your expenses, right? Essentially.
Mhm.
Mhm.
Because most time they file taxes together too, right? So your debt are rolled over,
Yeah.
your assets are rolled over. So if your debt are higher than your asset, if
Yeah.
you don't have, if you're struggling now and the person died, therefore you're double struggling.
Yeah.
Plus, if you take their responsibility on, then it's going to be hard. And that's why, hence, you see so much GoFundMe. It's not people want to go on GoFundMe, but they want given the proper information to make informed decision.
Right.
And because of that, unfortunately, we lose the battle
Right.
in our financial planning, right?
And I find that our community, melanated people, they sometimes take it for granted that, you know what, I'm not going to die anytime soon. I'll get a life insurance when I'm ready, maybe when I'm older. Maybe
Mhm.
I'll take my time. But we can't put a time and date on our death. We don't know when it's going to happen.
That's it.
So, now is the time to start investing in yourself, invest in your family as well, because when you're gone, you'll leave something for them to take care of the expenses and maybe something a little to help them better themselves, right?
And
Um,
another thing again,
mhm.
Jewel, sorry to cut you off,
Yeah, yeah, go ahead.
is that when was the last time many of us remember our great grandparents?
Yeah.
If we can see that, you can see this, the third and the fourth and the fifth. But in
Mhm.
our community, in our culture, in our diaspora, you don't
Yeah,
see that. You
yeah,
you rarely, I should say, see it because they left the life insurance, then they built it, then the other person they didn't need it, they left it, and they continue to build their wealth. So they can say,
yeah,
my great 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 grandfather
right.
build this. My great great grandfather. But we now maybe we might be able to say our grandfather, but
Hmm.
how far back can we go as a community? And that's the problem. We
Yeah,
have to start building wealth. And we can't build
absolutely.
wealth if we all in the community only stick to term and say this is where we're going to do because it's cheap. It's not enough reason to buy insurance. Another
Hmm.
argument that I hear people say, oh, insurance failed me. I had it on. Did you pay a premium? Oh, when I stopped, I said, hey, if you have your electrical bill
Yeah,
or even the government taxes or your land tax or whatever you don't pay, what happens? Do they
yeah,
say, oh, it's okay, she doesn't pay it, she didn't pay it, it's okay? No, they're
yeah,
gonna
no.
come at you. They're gonna cancel subscription, whatever it is. It's
Yes,
the same
yes.
thing. You have to take responsibility and do what needs to be done. Life insurance is paid from your discretionary income.
Okay.
That means
Yes.
after everything is paid out, your mortgage, your rent, your light bill, food bill, everything, car bill,
Hmm.
gas bill, everything. What is left is what we analyze to buy your life
Right,
insurance.
right,
Because we don't want to put you in debt to buy life insurance and you can't afford to pay life insurance. So
right.
we're not doing right by you, right?
Hmm. Hmm.
So now we're saying your discretionary income, you have everything that you need already paid. you pay that. Why are you still missing?
Mm-hmm.
Right? So that's
Hmm.
typically
Okay.
responsibility. Yeah.
All right. Because I know the conversations we've had before, I'm
Mhm.
asking very specific questions to tease out some information.
Mhm.
So for the life insurance, you were talking, let's going back to talking about the cash value and
Mhm.
having that, being able to have discretionary income,
Mhm.
that they can actually use.
Mhm.
When someone pays into a life insurance,
Mhm.
what are they paying into? Where is that money going?
So if they paid into permanent insurance, which might be a whole life or universal life, a portion, the whole life, as I said, is so rigid. So you don't really see how much is the cost of insurance. You don't see where to invest it. There are a lot of things that are just there. You just get a guarantee. You are guaranteed to get at the end of whatever time, you're guaranteed to get $50,000. Right? The universal life, on the other hand, we don't have a guarantee. But based on the trend of the index chart, it shows that this fund has been performing above 6% and beyond for the last 20 years.
Right.
So in 20 years, though today's market does not reflect yesterday's market, do not reflect today's. But
Mm-hmm.
when you follow the index chart, it shows you that that fund can go higher and higher and higher, or even lower and lower. But over time, it goes up.
Right.
So now,
Mm-hmm.
finish my thought. Yeah. So now that 50,000 that is not guaranteed, but you have the potential of even getting 100,000 by the end of the period.
Okay. Okay. So what I was wanting to say was that
Mhm.
the money that you're putting into your insurance is being invested into
Yeah.
um,
Insurance and investment.
insurance and investments.
Yes.
So your insurance is one thing, and then your investments is another.
Yes,
So
correct.
they're investing into companies, and then you get to choose what type of
Yes.
companies based on your risk
Yes.
level, how risky you are. So
Yes.
they do it in the banks, they do it with the insurance companies, but
Yes.
your money is being invested. So that money that's being invested is growing, and that's the one that you would use,
Compounding. Yes.
and it's compounding
Have the
with
potential of
interest.
compounding. Yes.
Yeah. Okay.
So now that money, when you see $20 for the insurance, $15 for the investment, that is compounding, 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 compounding. So here, if you pay the term for this, it's dead. 20 years down, it's gone, it's done.
Yeah.
But there's no investment. But when you have this and you have this, even if you stop paying, because most time I don't want my clients to go past, depends on the age, and I hope I get them before 45 at least, go
Yeah.
past 65 to pay insurance. So by
Yeah.
65, when you retire, you are covered for life, providing the premium has been paid and everything being equal, quoted at 6%, you have the potential of making up to how much the illustration says, should it continue at the trend. Once we do our review every year, which is
Mm-hmm.
important to make sure we do our reviews, making sure that we see that fund or funds are
Yeah.
growing what we say and above. If not, then we go back to the drawing board and say, what fund? Because we know already the objective. The objective is an life insurance to go for until whenever, right?
Okay.
Whenever we're gone.
Mm-hmm.
The time horizon, we know it's a long time, because especially if you're younger.
Okay.
So all we have to know now is the risk, which you rightly said, and then we put all three together and we know exactly what fund to put you in there.
Okay.
Yeah.
All right. And there was a question I wanted to ask. So I used to say, so I was one of these people, like our people, we think these a certain way for whatever reason it is. I think we have trust issues.
Yeah.
We don't understand, sometimes we don't understand things, and we might ask our friends, and our friends are not the ones who are the experts,
Yes.
and they give us their advice, or this happened to me, or I know so and so and so that this happened to, instead of going to the expert.
Yes.
Now for me, I'm going to tell you, truth be told, I kept saying, well, I don't even need life insurance. I have insurance at work. I have insurance at work. Why am I working so hard and
Misconception.
I'm paying this insurance to get another life insurance policy? You know why? Because when I retire, that life insurance policy is null and void. I no longer work for that company.
Mm-mm.
I can't benefit from something if I don't work for that company anymore.
You're no longer an asset.
I'm no
You're now
longer
a liability. You're someone else's asset. And that someone else may not have benefits.
Mm-hmm.
Because not all companies do have benefits.
Yeah.
So if you have RRSP, you can go with that. You can go with that. Insurance, you can, if you have health insurance, you can go with that. But a lot of people also don't know that they give you some time to take your health insurance and convert it to your own personal.
That's
So a
right.
lot of people lose their job and they end up losing their health insurance because nobody told them. The asset company don't care anymore. So that they're not going to tell you, guess what, Jewel? When you leave in, you can always go and convert it to a permanent.
Yeah.
So a lot of people lost their benefits because they either quit, fired, or just left the job or whatever. Yeah.
Yeah. And it's sad and it's truth. It is definitely truth. And I know when we spoke the last time, we were talking about even if you leave one company and you go to work at another company, you don't get to take that insurance policy with you.
No.
Right? Because that company is giving it to you because you are an asset to them at the time you work for them. Great. We're giving you these perks until you're no longer an asset, right?
Yes.
Yeah.
And they only cover a percentage of your. And one thing again that I want to address that with our people with trust issues, we're thinking because you and I are friend, both of us are friends, and then they have another friend in between. I'm gonna tell you about their business.
Financials,
What they
yeah.
don't understand that this is a regulated industry. If I'm to share your financial information to somebody else and they come back and say, oh, Joel, guess what? Sophie told me you have $2 in your account, and you take that to Fitzgerald, I can lose my license. So
Yeah.
do I want to lose my license at the expense of gossip?
No.
No. But a lot of people, because we're so close in our mind, we're thinking that if we let our Black person do business with us, or if we let they're my friend, they're going to tell somebody what I have. But we can't do that. It's illegal, unethical, and non-compliant if we do that. We can't do it. But they don't know, right? Yeah.
Yeah, and even I like to use the word ignorance, but I'm not going to use the word ignorance. I'm going to say the lack of education and knowledge. And this is why we're doing this show. And this is why we have this topic on, because there's a lot of people that they want answers, but they're afraid to come forward and ask these questions. So, if you want to go back and rerun or share the recorded show with your friends and family, do so. But the best thing is to invest in yourself and your family, right? Make sure your family is secure while you're alive and when you're no longer around, right?
Yes.
So there are, if anyone wants to ask a question, I see some people watching us. We're on a few different platforms tonight. We're on TDN TV Network 1, on YouTube and Facebook. We're on TDN Radio, and we're on VStreams as well. So if you do have a question and you do want to ask, please feel free to ask. I don't know where my producer is in the back, but I will see if I can figure out how to look at these questions. But we got a thumbs up. Thank you. I think that was Rosa. Thank you so much for the thumbs up. And we have some people saying, my favorite people, good evening. So yes, thank you so much for that. And how can we find you, Sophia? If somebody wanted to invest in themselves and their family, how can they find you?
Okay, thank you for that question. They can call me at 437-992-6532, or they can maybe calling might be better at this time. Yeah, 437-992-6532. Instagram or Facebook.
That's
Yes.
right. So we're gonna post the recorded show on YouTube. It's gonna be there, and I will be posting as well on my Instagram page. So if you do have to happen to come across and say, "Oh yes, I saw Sophia Waterman, the life insurance agent," and just send me a DM, and I will forward the
Awesome.
information to her. Okay. So have you had a lot of experience or a lot of clients or any clients that have bought life insurance for their children?
Oh yeah. The sad thing about it, I have a few clients that was denied, children under the age of 2 were denied insurance. What we don't understand too, I think because we don't understand insurance, we don't understand the power that we hold when our family has all those assets in our household.
Mm-hmm.
We assume that I can take it whenever I can get it. I want to do it whenever. We don't know it's a privilege for us because old and young have gotten declined, insurance clients that were declined. And we have to remember that when we're young and healthy are the most crucial years. Why? You could take advantage of it. You can take advantage of the cost, the premium, the low premium cost.
Mm-hmm.
Because instead of you paying $100, you're paying $40. You
Right.
know, then you can use that insurance, put it on to your grandkids. Then your grandchild might be 20 years from now, 30 years from now, going to get married. You have
Mm-hmm.
all that wealth built in that life policy. You can take it and give it to that child and bless them for the marriage, that they can have a
Mm-hmm.
great marriage. They want
Okay.
to go to school. So you can do it as a grandparent, you can do it as a parent, you can do it as a friend, whatever. There is the
Mm-hmm.
wealth that is growing into those policies. And having
Mm-hmm.
it at a younger age, and when you're healthy, it's a privilege.
Right.
Because when you're older, I had a quote I did for somebody, and it was from $50 I put at the age and then put 30 years later, and it's $333 a month,
Wow.
right? But if you renew that same policy with a company, it's $600-700 a month.
Mm-hmm.
So if you take it and you say, okay, by 65, I'm 40 now by 65, I'm 45 now by 65, because the
Right.
shorter the time to pay is also the premium. The health is a problem. The age is a problem. The
Right.
shorter time, you can pay 20 years and it more money to pay if you pay it in 25 years. So a lot of increases that goes into it to decide
Mm-hmm.
the cost of the premium. Then
Right.
underwriters, as I said, underwriters decide, is this person worth the few money that they're paying as opposed to the health risk or to family lineage. You understand? Mother, father, sister, sick. Is it worth it? And they might say, no,
Yes.
this person may not worth it.
Okay.
So there are a
Okay.
lot of things that can keep you from getting it when you think you need it, when you can get
Mm-hmm.
it when you're younger. And I spoke again about the smoking.
Right. I was just going to ask you about that to
Yeah.
mention those things. So the smoking and the alcohol, these things. So go ahead and say what you were about to say.
Yeah, so your child is 12, 13, 14, 15, 16, 17, not influenced by the society out there yet. So you
Right.
take insurance when they're young, that kind of age. But
Right.
when you hook them at 19, 20, and then you say, do you smoke? I had somebody just said they were rated because they said no to smoking. And when they did the test showed the smoking, what do you call it? The
Nicotine
nicotine in
showed
the
up.
urine or the blood or whatever it was. So you
Yeah.
don't, but when they
Yeah.
take the blood work, it showed up something. So you
Right.
can only lie as much. And the other thing, one thing I want to say, stress very importantly, don't lie on your life insurance policy and blame the life insurance company.
Right.
If an agent come to you and say, "Oh, don't tell them that," do
Mm-hmm.
not bother with that agent. That agent is unethical and should
Yes.
not be working with them
Right.
because they want the pay now, but who's going to suffer? Your family.
That's right.
Your family going to be the one when you die and they read and they say, oh, this is the okay, well, when we did this, we noticed that the person lied and said, bam, bam, but this killed them.
Mm-hmm.
Go back into the medical from way back Jerusalem, they had
Yeah.
that problem. But
Hmm.
because the agent want to get that pay now, without
Yeah.
we thinking, oh, yeah, we don't have to tell them, just leave that out. No, don't leave out
Yeah.
anything.
Full
If that
disclosure. Full
as
disclosure.
much,
Yeah.
I always say, if they don't ask you something, if a policy question did not ask you if you brush your teeth 10 times a day, don't say, oh, I brush my teeth 10 times a day, 12 times. They didn't
Yeah.
ask you that.
Right.
Right? But if something that is pertinent to help with the policy, then you say it. Otherwise than that, if there's a question there and there's a yes, don't say no.
Right.
Yeah.
Yeah. So there's no way of tricking the insurance policy as insurance companies. You are going to be asked to do a medical.
Yeah.
So, and if you don't know something, then, you should probably get a medical anyways. You should be going to your regular checkups to know what's happening with you. Yeah. Okay. Is there anything else that you wanted to share about I know that we were talking about, I don't know if we mentioned it. So there was a situation scenario, for example. I'm going to use a personal example. Someone I know was married to someone. They were married, a married couple. They separated. Not a legal separation, never divorced, and one of the parties passed away. The living party then was responsible. They were separated for a good amount of years, 8 years. And the living party had to now take care of their, you can call it their ex, right? But because they didn't divorce legally, they were just separated, not even legally. They were now liable to take care of that other person. So when it came down to next of kin, they were the person. They are the person. And they had to go and contact the job and contact the insurance company to make sure that this person was buried. So we need to be mindful of the things that we do as a people. I know sometimes we're like, make the other person pay for I'm not paying for the divorce. Make them pay for the divorce. No, you need to be mindful of things. Like proactive. What is the consequence of not doing this simple action?
Yeah.
Right? Yes. Because now in the end, you can end up with this person's debts.
Correct. And I think that's why I always stress on reviews. Review is one of the best thing that you can do when you start. I sit with you at the time, at my knowledge, because you always do the best when you do your reviews and so forth. But things change all the time. So every year you have a review. Jewel, when I sat with you last year, this was the best option. Since then, things has changed, gone to this way. Let's see if you qualify for this way. Let's see if your beneficiary was Tom. Is Tom still alive? Because Tom, you haven't done a review. I did not know. I sent a letter to a client Christmas. For years, I do that for all my clients. And when I sent the letter, it came back in a handwriting, client moved. And I emailed the client. I said, okay, I saw client move. That means person moved from the house. Did you move? If so, let me know because you can avoid fraud. All your personal documents going to go there. Last week, the person never responded. So we have to be more proactive. If anything happens to that client, I don't know where. They're not answering the phone. The person replied, oh, I'm okay. I don't want to change anything. New Year's Day. But then now, from last week, the mail came back, which is after New Year. So now I'm replying to that email. Okay, you said you don't want to change anything, but it says that you moved from your address. Did you change? Yearly review is important for those things. Making sure your beneficiary is your beneficiary.
Right.
Making sure the beneficiary is alive. Making sure your address is correct. Your telephone number is correct. Is there any change? Did you remarry? Did you get additional child gone? All these different things. Do you need more? Did you buy a bigger house, a smaller house? How
Yeah.
can we fix that gap? Is there a gap for your policy for insurance needs? How can I
Mhm.
fix that gap? But without that regular review, I wouldn't know anything. I already gotten paid, and you think, oh, I have everything. I don't need anything. She can do whatever. It doesn't work like that.
Yeah. Yeah. And I mentioned, I find that males, black males in our community, they tend to be nonchalant about a lot of things. Not all, I'm generalizing, but some of them tend to be like, oh, it's already done. You know what? I don't need to check in, right?
Yeah.
Like you just said. Or um, they tend to rely on their spouse or their partner to say, you do the work, right?
Mhm.
And not sit to understand where this
Yeah.
life insurance is taking them,
Yeah.
or what is involved in the
Yeah.
life insurance. So
Correct.
sit together. I encourage couples, families to sit together to
Yeah.
discuss this. Have a time where you sit and talk about, you know, this is the reality. One day we're going to pass away and we need
Yeah.
to secure ourselves.
Yeah.
Or, God forbid I get sick. This is
Yeah.
something that we need to do as a family to take
Yes.
care of ourselves. And a family doesn't have to be a family with a husband, wife, and kids. It could be a husband and wife. It could be,
Yep.
you know, grandchild and
Yes. And
grandmother, so
correct.
it's still, there's
Yes.
different types of families, right?
Yes.
So we
Correct.
need to
Correct.
secure ourselves
Yeah.
and make sure that we do the right thing.
Yeah. And sometimes for the child, like for example, the child insurance, the parent might want to now say, you know what, you're old enough and responsible enough to take the ownership of this insurance. I'm going to put you as the owner. So
Hmm.
having that constant review to say, know where the parent mindset is. The parent might say, nope, I don't want them to think it. They're not going to take care of it. So having that regular review review, and there's if there is any mistake, because we're all human, we don't want to make mistakes with our clients. That's one thing we don't want to do. But
Yeah,
if there is, the review will help it from going further than where it should go.
right.
But if we don't show up at reviews, we make excuses, we don't reply to emails, we don't reply,
Yeah.
then it's going to be bad, and then it looks bad on the agent.
Yes, yes.
Right? We
Yeah.
send letters, we send emails, we call, send WhatsApp, send text, nothing.
Yeah, but you're doing your due diligence, right? You're doing your due
Yes.
diligence. The ownership really is on us. We need to take responsibility as a people in general, and be more mindful of, what we need to do for ourselves. We can't just have, say, oh, that community is doing well and that community is doing well. And there's a reason why they're doing well, because they're investing in themselves,
Correct.
right? So we need to invest in ourselves as well. And as you said at the beginning of the show, getting life insurance will increase our value as well. So
Yes.
let's do that as a community, right?
Yes.
All right.
Correct.
So
And as I said earlier, is if it's a gated community, most gated community, you see they have security going around, or they might have a security pole and so forth.
mhm,
Guess what? The insurance want to make sure that nobody coming in there to pull out, and they have to pull out unnecessarily.
you're
So
right.
if we treat ourselves, our children, our lives as a gated community, we put value in our own household. If every Black person in the neighborhood where
Yeah.
they're dominant into put value, whether they're dominant or not, put the same value as others put on themselves, we'll see a whole lot. They won't be pulling us. You think the George Ford, or whatever his name was, you think he had life insurance on him?
George
No.
Floyd, no.
You understand? Because they have to go, most of these things have to say, go fund me, because they don't have life insurance on them. But if there were, there would have been a different thing altogether.
Yeah. Yeah.
The
His
value.
funeral was paid off by one of those stars because they probably didn't have a life insurance, right?
Yeah.
Yeah. So just again, I want to reiterate, contact Sophia Waterman at her number. Say your number again.
437-992-6532.
Right. And she is not going to be hiding anything. There's no fine print. If there is, she's going to review that fine print with you. And I know that for sure because we went through it. I went through it myself with her. And, she's not afraid to answer questions. She's very knowledgeable about her job and the work that she does. And, feel free to ask. You're welcome to ask any question, right? And sometimes we have reservations, right? Because sometimes we look at people that look like us and say, oh, they're going to scam me. They're going to this, they're going to that. But we need to take a chance on our people as well.
Yes.
Take a chance on our people and invest in our people. I'd rather go to my people than to go to someone else. That's my mindset, right? So let's invest in our people and in our community as well. All right?
Right.
Okay. So we have a few minutes left. Because we have another show that's coming on right after us. That show is Anthony Drago's show. It's starting at 8:00. So I want you to hang back a little bit just to listen in for his show as well. I'm going to read some comments that have been coming in. I want to say thank you to everyone who's been tuning in on YouTube. Deborah, thank you, Deborah, who says, my favorite financial advisor. See, I wasn't just talking. Deborah says it too, right? Cordelia says, great information. Thanks for explaining all about life insurance and its benefits. So,
thank you. Thank you, guys.
Thank you, Sophia Waterman, for being on tonight. Again, so tune in to Anthony Drago's show next. And again, Sophia Waterman, thank you so much for your time. We really appreciate you. And if you want to ask her more questions, you can send her a message on her Instagram. Just type in Sophia Waterman, or you can call her on her phone number. Rewatch the show if you missed anything and you want to review. We'll be there on YouTube and Facebook for you. All right, have a good evening. Thank you, Sophia.
Thank you for having me.
All right, take care. Thank you for having me.
Talking Joe podcast, minds in motion. Talk about relationships, help your emotions. Behavior management when your kids start to losing it. Talk about life and all the confusion.